have you spent much time in Bangkok, Ian?
I know the place, but yeah, I mean, not much that I'd maybe want to discuss in public, Scott. But I know Bangkok. Yeah,
Yeah,
yeah.
my wife and I have been doing like 3-day trips there and picking like random neighborhoods that you'd never visit.
That's the
And
way.
yeah, it's been really cool. We stayed at like this like seedy ghetto on the edge of Chinatown, called Sangyat, Sakyang, something like that.
Up here,
But
bro. Sorry.
yeah, it was just really cool. Like there are no hotels in the area. There's no public transport. It's been like it was the old wharf area like 200 years ago. So it's like it, it's like fucking old. Like every building's over 100 years old, and when you walk past everyone's
That's the
house and you see this.
experience that you want when you don't know anything about Bangkok, when you've never been to Thailand. What you've just described, that is what you want. All this McDonald's and Starbucks
No,
nonsense.
it was like a Bruce Lee kung fu movie from the 70s.
Hey,
And
red,
we
red, yes.
not didn't see a white person while I was there.
I know, and I bet the food was just off
Out of
the
control.
charts.
Out of
Yeah,
control, dude. Like from
you
these
know?
places that looked like fucking, hepatitis factories.
Yeah. Now I've seen that one that you took the picture of that literally looks like meat with slime on it, but it
So good.
unbelievable.
Yeah. 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 So we had a great fucking time and beaten up by the local massage aunties, and they're like, and they're whispering in your ear, Jeb Mai, which means in Thai, does it hurt, motherfucker? And you're like, Jeb, no, it doesn't hurt. Then why are you crying?
Exactly. More.
Yeah, it was just a really cool scene. I really recommend it. Like there's no hotels there, so you have to stay in these like dingy 100-year-old shop houses. It was like fucking dope. I really recommend it as a couple of days away.
Nice. Nice.
Nice,
Yeah,
nice.
cool.
Mm.
Well, speaking of pleasant things, how the
Yeah.
1 week later.
Oh,
Oh,
and to all the motherfuckers who were bitching a couple of weeks ago, you can always tell the fucking pitchforks come out and the bitch. You told us that there would be Lambos. That shit always happens like right before the miracle happens. It's so reliable.
Yeah.
So reliable.
Really is. And it's like the prices that have been on offer.
Whoa.
That's joined the club and gone to the trade log and read the welcome post and understand that you can take any of the trades that are on the log. I mean, fuck, I bought Woo at 11 cents,
You got 11 cents. You got 11-cent Woo, motherfucker.
You know?
Fuck off. Oh, shit, yeah. It's 18 and a half yesterday.
No, and if you'd asked me 3 months ago, Ian, do you think you can buy 11 cents Woo 3 months
I
from
would
now?
have said no way in the world.
But now, the other thing, I'll just share my screen. There's a couple of just interesting bits before the.
There's a couple of interesting bits and pieces going on now, right?
Yeah. A lot of different interesting things.
I mean, first things first, I always like to go to the monthly chart and have a look at the big picture. This blue line here, this 60,000, this was super important that we reclaim this because this has been our support for 1, 2, 3, 4, 5, 6 months. So we got how many days left?
A beautiful looking chart now, isn't it?
It is looking nice. And I tell you the expression that's in my head is curling up. Like it's not quite melting up, but it's still choppy, but it's not this aggressive, which we don't want. It feels
To
more
me, I would describe it as undamaged. So for all the pain that we've been through for the last couple of weeks, you look at the chart, you zoom out a bit and look at the chart and you go, that's undamaged. That if you were to look back in a year and Bitcoin's at 200,000-300,000, you would say, oh yeah, you'd look back and go, oh yeah, I would have held through that. I'm not a pussy, even though it was really hard to do.
Exactly.
Or you wouldn't say like I would have bought more, you know, why, or the worst thing is like why I didn't buy at that price, right? Like, which is
Well,
the
you know,
most,
now I think this is an important lesson that we have to sit on that big down fucking day candle when the world was ending and the Jap trade was unwinding that had nothing to fucking do with us. In the chat, anyone buy more that day? I didn't. I was tapped out.
I did.
You did
I
because you
bought,
know.
I
But
bought, I bought the big ones. I bought Solana. I got Solana. I got
nice,
Ton.
Cameron
I
bought at
got, yeah,
55.
I
Eric
got,
Perry got wrecked and tapped out. Todd tapped. Jason bought Sigma. That's a good play. Kimberly bought BTC and Sol. Warren had some liquidations that day. Bought more Sol. Yeah, it's hard to fucking do, right? Like that
mm,
thing that you learned from being in that situation. If you were the one who was watching your account balance go down, hoping you weren't going to be margin called and liquidated, that is super valuable experience. Cost you money, hurt your feelings, but you got to learn the lesson. If you were the other way, if you had the big balls and you bet right when the world was ending, you've also got a powerful lesson from that. If you were on the sideline and thought, oh, I'll give it another couple of days, and then a couple of days happened, and then you waited for a pullback, and then the pullback happened, and you're like, well, I don't know, I want to give it another couple of days to be sure. And now you're sure. Like, then there's a lesson in that too. So, okay, so you're fucking sure at 64.5, but at 58, you hated it.
Mm.
Okay, so what does that tell us about what your brain, the way that your brain perceives the information that's streaming into us? That's also a lesson that the information that comes into us and our brain's interpretation of it is nearly always completely fucking wrong, no matter how good at trading you get, right?
Mhm.
mm.
Absolutely. And I think the other lesson is here is like there's an infinite number of trades. And I say that because we always want to have a little bit of cash in our portfolio.
And you don't have to make it back the way you lost it too, is the other thing. You're not stuck in it because it's worth less than what you pay for it. You can get off a losing horse and jump right on a winner.
And that's what we do is back the winners. And just something technical here that people might be interested in. I mean, we had a lower low in 10 bars, higher close, lower close on the daily, which is great. But this big candle here. So one of the things that I've been consistent
Textbook, isn't it?
and repeated is the most basic level to think of this is what is the interaction that happens when we touch an important line? Like, it doesn't get any more simple than that. And if we look here, we closed above that line on this great big candle. And then the next day we retested it. We stayed just above it. This next candle, there was just a little indecision. We dipped for a little bit. And then if we look here, when we get to this next retest, it's over and done with in a day. Closed above it. We retested it.
Okay, so let's dig into that a little bit to people, because you understand it at a very deep level now. What we saw there is a retest and a very strong kickoff. One of the things that we know is that bull moves that have legs tend to have a very strong kickoff. Why? Because there are people who were just giving it one more. I'll just watch it for a couple of days, and now they're on the sidelines wishing they got in. And then it starts to dip, and more sellers sold. But you can see that because it kicked off so strongly, there was buyers to step in every time it dipped. And so what that does is it's soaking up sellers, soaking up sellers, soaking up sellers. And so if you imagine a trading range, we have two different modes of operation in the markets. We have one where the market is trending, which is like where shit is getting out of hand. Like prices are going up just because people are getting excited. Because it's going up, we've got more paper profits. We're spinning that profits into alts. We're like doubling down. We're using leverage. Like, that's one mode of operation. The other mode of operation is when we're chopping around sideways. And that chopping around sideways is like a World War I trench warfare battle of attrition. Like, we're just wearing each other down. And it seems to me that the evidence is that the sellers have been worn down to the point where everyone who was going to sell, or everyone who was going to get liquidated, got liquidated or sold in that big fuck off candle. And then we just sopped up the last of the gravy with it in the last 2 weeks. And now the last week, we're seeing evidence, like what Ian said is curling up, I think is accurate. But why is it curling up? It's curling up because we're like, you know, we've got a bunch of sauce, we ate all the meat, and now we're just using a piece of bread and sopping up the last of the cellar gravy. And when that's all gone, there's no cellars left. Like the buyers have a free run at it, right? And that obviously happens at that red line that you've got.
Yeah, that's the red line at the top. That's when we're off. We have this other line in the middle here. So to be clear, we don't have to have a retest of this middle line. We could just blast through it.
I wouldn't expect a retest of the middle line. I think it's technically not out of its trading range until it breaks the red line, but it's already behaving like it's gonna bang. It's giving you this, like the whole point of reading the tape, instead of relying on, you know, backward looking things like lines and indicators and moving averages, is that we can get a little bit of an advance warning as to what's going to happen. And I think it's pretty clear that we're seeing decreased selling pressure, which means there's fewer sellers left. And I think we're seeing more buyers step in. We're seeing more optimism. We're seeing, you know, I think that's the story that we're seeing here, right? Like it's starting to, it's a lot clearer than it was a week ago, right?
Oh, without shadow of a doubt. I mean, looking at that, so this is the weekly now. It has changed from the daily, but I look at that and I think, right, what are the odds that we just keep going up? And I'm thinking, right, I'm at 80% odds that we're just going to keep going up. Odds that we blast through the blue line and get to the red line, probably 50%.
So Perry makes a good point, is that we're still making a series of lower highs and lower lows. What are the odds that it actually have to break the high of the recent giant black candle? No, all that stuff about it has to do this, it has to reclaim that. Like there's nothing that has to. Like if someone sits in and buys $1 billion worth of Bitcoin today, we're going to break that line today. If someone sells $1 billion worth of Bitcoin today, we're not. Like, so one guy can change the whole shape of this. So what we're seeing is the visual evidence of a story that's playing out between buyers and sellers. What that doesn't give us is a crystal ball into the future. It just gives us it's a weather vane, not a crystal ball. You know, it's like walking outside and going, wow, it's raining. I'm getting wet, so it's probably raining.
Nice. What a introduction. Hopefully that's a great seg to you, Maurizio.
Go, Maurizio.
Right. Yeah, interesting. Let me just share my screen. I have a bunch of stuff to share with you guys because I think
I'm interested in what you like today. Like
oh man, I've been doing a lot of research in terms of the new projects. The whole week yesterday, the whole last week. That's been sort of. Do you guys see my screen now?
Yeah.
All right, so let me go through. Yeah, we already went through Bitcoin, but essentially, yeah, like weekly stuff looks fantastic. Monthly stuff, which is going to be very close to the monthly close. Let me have a look at it. Let me show you monthly. So look at this monthly candle, man. Like in terms of the monthly perspective, right? If we close that in a couple of days, it's like 6 days away from it. Huge rejection. I think this is as bullish as it can get, right? From the monthly perspective. So we have several catalysts, right? To actually to support Bitcoin and the whole bull market going up. So yeah, that's in terms of Bitcoin. In terms of the new things that I'm looking at, right? So last week I created a list of all new launches that actually happened 2024, right? This is all new stuff, like against Bitcoin. This is pretty much everything that I'm researching.
This
because
is cool.
This is my theory, and actually the theory is playing out, and I'm going to talk about. Remember, guys, that I was telling you about the possibility that we have this transition from Solana to Ton. I think I'm mistake that might happen, but I think what's going on at the moment is going to be Solana to Tron. Okay, so the Tron network, right, it's been really,
You see that scam
really
bullshit they pulled with the Tron Bull coin, pumping it to 200 and fucking $50 million in market cap over the weekend, and you check the holder map and there's like 248 individual holders. It's like it's a complete scam. Like they're running the pump fund playbook back so hard.
exactly, which is going to
Which
catch
is
some
great.
attention, right? Because it's going to be, I think it's going to be the meme theme on Solana is actually so like yeah, it's like I think it's overrated at the moment. There's so many crap on it. But they launched Sun Pump, right? Sun Pump is kind of the same thing as the Pump Dump Fun
Ronnie,
on
that's pretty
stock.
funny.
So I think short term, this is going to be the new meme game. Okay, like in the next couple of weeks, especially if Tron keeps performing the way it is, right?
Agree. I fucking hate it, but I hate it. I absolutely hate it, but I agree.
I know, and it's gonna be the fight between Solana, Tron now is in the picture, and Ton still, and obviously, that this guy from Tron, what's his name? Pablo. I don't. He got arrested
Christensen.
on of the week. And,
Oh,
no, the one on
the
Ton.
Telegram guy.
Yeah,
We
the Telegram.
we got to talk about that because that is a very appealing short, and I've got some ways to play that.
Interesting. All right. So yeah, this is one of the things that I'm looking at. So I'll be paying attention on some of the memes. So my first one that is Sundog. This one is been performing quite interesting, and it could be the leading meme on the chain itself. Just like Wave, just like Popcat, or all this stuff. You know what I mean? That happened in the other chains. I think this could be a really good play. So I'll be keeping an eye on that one. But in terms, yeah, that's basically the first thing I want to talk about in terms of Tron could, all this meme stuff. Obviously, it's highly speculative. So have that in mind. I've seen a lot of people that get liquidated and things like that. I wouldn't be trading this with leverage, especially the Sun. Let me show you that one, because I was going to put a position on last week, but it's actually highly volatile, highly volatile. So yeah, this one, let me just done daily. Yep. All right. So it's been performing quite good, right? You can actually trade futures and Mexi. But just over the weekend, right, went down 22%, went up 10%. So obviously trading this with leverage will be pretty tough, right? This could actually get really volatile. So that's why I've been playing pretty much a spot, and it's going to be a lot of opportunities on the spot market if you don't actually play leverage. And for those ones that actually got liquidated, that's the downside of playing with leverage, because when you get liquidated, your mindset goes into a different thing. Like, fuck, I hate this shit. And then you basically will not buy things on spot long term because of that reason. So have that in mind in terms of mindset, right? When you do leverage plays, because it has to be completely independent what you do from the spot perspective and the leverage perspective. So with that being said, let me just show you the goodies. So this is all the new projects, right? New projects that actually were launched on 2024. And this is just to track which ones are the ones that are breaking and sort of giving a lift off, because
Yeah, you can see it, right?
exactly. And we already went into some positions last week. So now the interesting thing is that this is on the daily,
What's that
by the way.
What's that red bitch?
This is Ondo.
Okay.
Yeah. So from the daily perspective, right, we have Ondo, which is leading the way, obviously, but you can start see, and by the way, the blue line here is Bitcoin. So you can actually see these ones breaking now. We already went in on a position last week, and this one is actually drift. So Drift is a new exchange on the Solana network, and it's a DeFi product. Like you can actually trade. It's same thing as Hyperliquid, same thing as DYDX. You can trade PEPs on the Solana. Looks pretty promising. So I think that could, it has good ticks, and it's actually performing quite well. And we went into a position last week on this one. So I'm happy with it because it's actually performing. This is sort of the narrative around it, right? So you can actually see which ones are the ones that are going to break first. And I'm following, obviously, Jupe. Still, we are in Jupe. And this one, which is Sundog, I'm tracking that one as well. So you can start seeing which ones are the ones that are, which from the new projects are the ones that actually break first. And that's sort of the reason why we went into that one first. But I'm still tracking a bunch of new stuff that it could break early. So that was the daily. If I bring it down to the hourly, so from the hourly, you can actually see. So that's why we enter in this one early, right? So obviously the hourly is going to give you a little bit more volatility, but you can start seeing which ones are the leaders.
So what's the blue? What's the number 2 there? The purpley blue.
This one, that's Drift. This one is Drift.
Wow.
Yeah. So
Wow.
this one is Drift. The next one over is Spec, which is part of the AI thing. This one
Boy, Drift
is,
looks fucking great, dude.
I know. Yeah, we went into last week with a position on
Fucking
it.
gonna buy
so-
some of this. That looks fucking banging.
And honestly, I looked into the project. So besides this, I'm just making sure that the project is actually sustainable in a way. And then the good thing about Drift is that essentially people from the US, obviously, this is kind of the same thing as the YDX Hyperliquid. Now you can this actually you can trade PEPs using Drift on the Solana. They building their platform on the Solana chain. So I think it's promising, right? I don't know if it's gonna last or not, but it definitely looks promising. And the fact that they're doing these mechanisms that you can place bet in the election, like they're doing a lot of things on the election. So they're creating that from the revenue and fees perspective. So I think that could be an interesting play. So that's my favorite. But then I'll be tracking these ones as well, because obviously, as you can see, when things starts breaking out, now you can actually translate into daily and come on. Then you can actually see that now it's a sustainable one. And this could break out as, as unknown, maybe, perhaps. So it's tracing well, so it's looking good, and yeah, happy with it. So that's kind of, I'll be adding some more projects into this sort of spaghetti chart and doing a little bit more analysis, but yeah, that's pretty much what I have. You guys, it's quite interesting. It's quite interesting, this one. A lot of new stuff happening, a lot of new projects is coming, a lot of new airdrops as well. So with the new projects, they are releasing a lot of airdrops. So it's a lot of activity on the airdrop space. So I think that's also going to support the bull run. Everything is going to go ballistic. It's a lot of new projects coming out, and it's a lot of new chains. It's a lot of new airdrops. And when I see that happens, more than likely, that's going to provide liquidity into the market, and everything is happy, and everybody buys stuff, and it's gonna support our trade. So far, so good. Everything is tracking well.
It's very exciting.
Very exciting.
Yeah. And I'll be doing a lot of more stuff on the meme ecosystem on the Tron. So I think that's very highly speculative, but the fact that people just started realizing that they can actually trade memes, or they can actually publish memes on the Tron ecosystem. And by the way, if you have a look, I've been doing a little bit of research on the Tron. This is the Tron fees, revenue and price and transactions. So it is like I've used Tron. Like Tron has been for ages. And
Okay, so let's talk about Tron, what it is. Tron is a dinosaur coin. It's been around since 2017. The guy is a greasy kind of bullshit. His coin, his chain and USD tethers on that chain are like ground zero for money laundering. Like in where I live in Phuket is one of like 4 places in the world where they'll let Russians escaping the war go, and they send on the Tron chain to a guy here who gives them a sack of cash in Thai baht that they can use to live, because Russians can't use credit cards or Swift bank accounts, right? So Tron is the money laundering chain. That's what it is. It's
Yeah, but
hugely used. It's used
it's
everywhere.
hugely used. That's the
Hugely.
thing. And it's very simple to transfer coins around, and all the exchanges support it, right? Most of the exchanges, by the way, not all of them. And that's sort of been my preferred transaction, the way that I send USDT across.
Because it's so fast, right? Because it's centralized. It's not a real crypto. It's just like one guy controlling it, right?
Exactly. And it's only like $1, essentially. Like for every transaction, it's only $1, one USDT when you actually transact. So it's quite cheap. So you can do multiple transactions, different things. So the fact that it's there and a lot of people use it generates a lot of trust in a way, right? Like obviously, it's a stable thing that it has never sort of failed in terms of transactions. So a lot of people use it from that perspective. So you can see now that the more they push it, the more people use it. Then now that they realize and they understand that they can actually start doing this meme stuff on it, and these ecosystems are actually going to be created, and that creates hype, right? Is that going to last? I don't think so, but it could provide really good place for the next couple of weeks in terms of meme shit, stupid things, man. Like, you know what I
Okay,
mean?
so
Like,
so let's talk.
yeah.
Let's talk about that as a general principle. Where do we find edge as retail traders? Mostly, the risks that we take are mostly taking on risk. If you buy a basket of any sort of coins, that's partially a bet on the individual coins, but that's mostly a bet on whether or not we have a bull market or not, right?
Mhm.
Like if we get a bear market, everything's going to go down. If we get a bull market, everything's going to go up. It's just a question of how much and how far. If you're looking for an edge that's actually a mispricing, like there's real what they call alpha, which is we've discovered something that's at the wrong price. That goes from being very weak edge to being very, very strong edge. They go from being like 55-45, 60-40s to being 90-10s and 80-20s. And usually that happens with brand new things. We saw it with Pump.fun when it was brand new. There's another one I've got my eye on called Dumpy.fun where you can short meme coins. I would anything that's new in crypto is a good place to look for edge for the first couple of weeks. And in 3 months, I absolutely guarantee this will not be something you touch. You wouldn't fuck it with Maurizio's dick in 3 months. Like like there's just no way it's not going to be riddled with scams by then. But like for
Oh, definitely. Yeah,
the next week or two, it's probably a free kick.
exactly. I agree. And obviously that's kind of the game, right? And I thought it was going to happen in Ton first, to be honest. That was my first gut feel, because obviously they created a couple weeks back, they created the equivalent of Pump and Fun on the Ton network. But I think the fact that this is gaining momentum, TRX is actually booming, right? From like everybody's sort of getting the attention of it. Then it's just starting in a way. It's just starting, and then with that traction, and that keeps, if Trump keeps behaving the way it's behaving, I think this could be the transition, right? So that could be the best narrative that you can be playing at the moment, right? Like that, yeah. So capitalize on I'll be looking for some bots and stuff like that on Tron, see what I can find. I haven't played any Tron memes yet or anything like that, but it's sort of exactly the same thing as Solana or Tron, or the same thing. So it should be something out there that we can definitely use to capitalize on this thing, man. So yeah, interesting.
Should we talk a little bit about Ton?
Yeah, I think that's go ahead. What's your thoughts on Ton? Because we do have some positions on Ton.
Okay, so for those who don't know, Ton is the coin of Telegram, which is an encrypted messaging app, and it's owned by a pair of Russians who, right from the start, they realized that Vladimir Putin was probably going to put the squeeze on them and force them to share their chats with the Russian security apparatus. And so they've held Bitcoin, they've held all their money, like 100% of their assets in Bitcoin since they started this fucking company. The Ton owner who got arrested in France is a top 100 in the world Bitcoin holder, as well as owning Ton. The investors in Ton, the biggest investor is Pantera, which is a notorious VC scumbag firm. And they made their biggest investment ever in Ton. Now, you can see that when the news came out, let's look at a 5-minute chart of this. You can see that when the news came out, immediately people started selling. But is that true? Did people start selling it? No, they didn't. And you can see what happened is in the futures market, instead of selling it, they're temporarily hedging their bags. So you can see that the way that this open interest in the futures is just continually going up. This is a TWAP or a VWAP order buy or order sell. So someone said, okay, we own $1 billion worth of Ton. Fuck. You know, this could go to zero. What are they trying to do? They're trying to hedge it. And we're going to look at the funding rate for this to see how much they're paying to hedge it, to see if it's actually worth doing. So first of all, let's look at the funding rate. And let me change this so you can see it. Okay, so you can see the funding rate is now 0.268. What does that work out at per year? Let me just one sec. So the funding is still pretty reasonable. It's only costing him 10% per year to hedge out. So imagine you own $1 billion worth of this coin and the price is $7. The founder gets arrested. There's a possibility it could go to zero. So there's a couple of ways. That this can play out. I made some notes as to my thoughts. Let me find it. So this action here, you can see the way the funding rate is going up. It's very, very indicative of someone hedging out their bags. And you can see the long short ratio here reaches a low, reaches a high, and people are still shorting into this bounce. So this coin is this is what's called the special situation investing. There's a whole there's a desk in most hedge funds and most investment banks called the special situation desk. And a special situation desk is where there's a discrete event, where there's one event that totally changes the value of everything. Like, for example, the Twitter price before Musk took it over was going to be radically different if Musk was forced to go through and forced to, or could weasel out of the deal. So this is a special situation kind of inherently, like, so the long, it could skyrocket. What would cause it to skyrocket? They let him out of jail and they let him back on his private plane, and his lawyers get him out and he hasn't talked and he hasn't ratted and blah, blah, blah. The shorts are gonna be emboldened if there's no news after 48 hours. If, like, that was yesterday, we've been about 24 hours. We want to see what happens after 24 hours, after 48 hours. They can only hold him for so long. If he dies in jail or some shit like that, like the conspiracy theorist guys will go nuts and this coin will go to zero. So this coin could either drop by like 80%, or it could skyrocket back to where it is. This is a very, very dangerous play. I wouldn't have any dog in this fight right now. But if you owned it, you would definitely be shorting it, right? So if you own ton in your portfolio, you've got 100 grand worth of ton, you can pay 10% a year or 0.8% per month, or $150 a day to take no risk at all to hold that ton by hedging it out. What are you going to do? Like you own 100 grand worth of ton. Are you going to pay $150 to not take any risk on it today? Seems like a good deal, right?
Mm-hmm.
You can expect more selling pressure until we get news. If you hold this in your spot account, I would definitely hedge it. Definitely a good deal to hedge.
Which, by the way, we do have a position open on Ton at the moment, so that will be a good idea to do, right? Either to hedge it, or if, I don't know, if you don't know how to hedge it, I reckon, what do you think, Scott, in terms of selling 50 and just leaving 50 on the table?
Okay, so this is a good thing that Maurizio's brought up. If you don't know and you're like, do I stay or do I go now? That's always a sign that you're thinking like a muppet. You can do halvesies. If you don't know, do halvesies. You know, the best risk control is the risk control you actually do. And risk control is not about, you know, I can teach you all, I can bore you all with the maths of it, but it's really about being a pussy or being an idiot. And you want to size yourself in the middle of being a pussy or being an idiot. You know, a pussy would say, I like Ton, now I hate Ton, I got to get out of it. An idiot would say, fuck it, we ball. It'll come good. It'll be okay. And you want to be somewhere in between, intuitively being a pussy and intuitively being an idiot. That's really all risk control is. So halvesies is fine.
I will issue a signal after the call. I will issue a signal to close half, just for risk management perspective. Yeah, if you don't know how to hedge it, because that, you know, it's one of those things that most people, I think, will not know how to do. So, but that, I'm in the same boat. That's an interesting. Would I short it now? I don't think I would yet. But yeah,
Is there anything else you wanted to discuss now?
No, I'm all done, man. I pretty much went through.
So I'm just going to
everything.
take a quick tour of the TradFi markets. Here we are about, 1% from all-time highs. The bears are hoping against hope that it's a fucking retest of the highs, and we're going to do that. This is what the bears are hoping for. It doesn't look like it's going to happen, but you could reasonably expect Like that would also be, pretty normal too. Bears are fucking retards. If you are constantly looking for reasons to short a chart like this, I don't know what to tell you, but you're a fucking idiot. Stock markets go up. They go up for perfectly good reasons. They go up because stocks are risky and people expect to be rewarded for risk. They go up because human productivity gets better. We're always inventing new shit like AI, like fucking nuclear fusion, like space rockets, like all kinds of shit. We're always inventing it. We're a fucking clever species of monkeys. And that cleverness makes stock markets go up. Like if you think about what the world was like when, 40 years ago when I was a kid, simple things like going to the bank used to take half the day. Like checking out at the supermarket there was a huge employer. Like everything was just a ball ache compared to how smooth and seamless the modern world works. You couldn't get food delivered on a motorcycle like comes now. So all that productivity, all the changes in life, the iPhones, all that shit makes stock markets go up. So you should never ever be one of those guys that gets biased to the downside about because they always want to be right. Like if you're doing that, most of all, you're wanting to be right. What are we seeing with bond prices, which are the reverse of interest rates? We're seeing bond prices. What do you make of this chart, Ian?
It's just going up.
Bond prices up, interest rates going down. Interest rates going down. Good for crypto or bad for crypto?
For crypto.
Good for crypto. Good for anything stupid.
Yeah.
That you want to buy, like anything risky. Okay, so let's look at some other stupid, risky things, right? Tesla. Half, but it's been going up pretty substantially recently. Like, the evidence is that stupid, risky things are catching a bid here. And let's look at things that would go up if we were really about to be in World War III. You would expect oil to go up if we were going to start World War III. Oil has not, in fact, gone up. Right? That's all a bunch of bullshit. The Iranians are fucking pussies. Like every fucking time that Mullah gets on TV and says, our vengeance will be swift and furious and we're going to do so much, we're going to fuck you up so hard, and then they do nothing. Like again and again and again, they just do nothing. Like, Israel bombed the shit out of Lebanon yesterday. The price of oil went down. What does that tell us about the probability of war? It tells us that it's not going to happen. Like, it just tells us it's not going to happen. For me, I'd like to take a quick look at some meme coins. Let's look at Retardio first. I'm pretty happy with this. This looks like a low that's got in. We're retesting the lows. I want to see it break here. I'm holding in Retardio. I think that looks pretty good. Market cap of 62 million. You can see that we've got individual buyers coming in, way outnumbering individual sellers. This one, I'm not going to say the name because we had some complaints about saying the name. Looks pretty good to me for a $2 million market cap coin. Like this is a decent shot at a 5x in a short period of time. Billy. So all these meme coins are behaving the same way. They're all retesting the lows, right? Sigma. This one looks great, by the way. Someone bought Sigma. This one went up when the rest of the memes went down. I reckon Sigma's going to bang. And what's the other one? Oh, what should we look at? Mitch, while we're here. Okay, Mitch, I know pretty much everyone involved in this coin. And the bubble map looks pretty good right now. We're going to pump this pretty soon. Just waiting for the right time. We're going to put a hurting. We're going to put a hurting on this one. Yeah, but it's going to go fast. So, you know, are you protected here? Yeah, I'm not going to let it. I'm not going to let it go down. I will personally buy it to stop it going down.
I mean, the price on Sol itself is very good, but when we get that next Sol pump, which it looks like it's coming, then the beta on these kicks in hard.
Well, this isn't this one. This particular one is more like a little scam that a bunch of people that I know are pulling. Like I'm in a bunch of these group chats with pro traders, and they've been quietly accumulating, you know, $100 at a time of supply over the last month. This one's, if you had $1,000 and you just wanted to YOLO it and turn that 1,000 into 10 and then see what you could make with it, this wouldn't be the worst play in the world. I reckon you'll see above here. Pretty quick too. What else am I looking at in terms of memes? Let's look at. Nothing special. Popcat, very strong the last couple of days. Back to 700 million. This one looks like it's going to bang to me. And we compare it to MOG. MOG looks okay too. I mean, all these are garbage things, right? Overall, oh yeah, let's take a look at FINREV. Actually, let me get up and look at that. There he goes. Bit of a retard this morning. Okay. So you can see in the last 30 days, it's pumped, it's back. We're at 2% for the last 30 days. I think this all looks pretty good. Let's look at our positioning. This is at 90 vol, so it's a bit out of whack. You can see that we've got a really oversized position in TRX. Like this is a $90,000 account, and it's got $15,000 in TRX. And what are we long? We're long TRX, BNB, BTC, XRP, and we're long a few of these other things, and we're not short much at all anymore, right? Like we're really short, like chump change. Like the biggest short is we're really short chump change. So we're probably 90% long now. So any sort of up move is going to really help us. And our biggest positions are really, we're 90% long here, right? Let's go to page 2 and see whether this is sorting them by notional value. We have to get to page 2 before we're 50-50 long shorts, and the shorts are all small. So yeah, I'm pretty optimistic about FinRev positioning here too.
I carry it exactly the same calls, Perry. So if you've already paid for these calls, then you're on these calls.
Kurt has a very good question. Should the volatility target be more than 45? Okay, so this is a question about maths. And the math question is, this is our expected return. At a certain volatility target, oh, sorry.
It's got, yeah. Okay.
So this is our volatility target. Rising, rising, rising. We can expect more returns. Beyond a certain point, you can expect, on average, less returns. If you go past full Kelly, you experience less returns. What is the full Kelly volatility target is our Sharpe ratio squared divided by 2. If our Sharpe ratio is 1, the absolute maximum volatility target would be 1 by 1 divided by 2 is 0.5, is 50%. If our Sharpe ratio is higher than that, and our Sharpe ratio varies between about 1.2 and about 2.2. So in the good times, you can go higher with a higher Sharpe ratio. In the bad times, going with the higher Sharpe ratio hurts you. So you can see, if we look at the last 12 months, when the going was really good earlier this year, 50 vol was up to 116%, whereas 35 vol was up to 59%. After a full year, 35 vol is at 57%, whereas 50 vol is at 77%. But 35 vol has taken way less drawdowns. 35 vol has been better than 50 volt. So 50 volt is technically about the maximum that any sane person should use. I use a mix of 35, 50, sorry, I use a mix of 40, 50, 70, and 90. On my 90 vol account, which I'll show you here, which I only have like 90 grand in, you can see that I have to be lucky to win. Like, I'm probably going to completely underperform unless we get a really big bull market. If we get a really big bull market, this thing will do 10 times as good at 90 volt as it will at 50 volt, like 10 times as good. But if we don't, I'll badly underperform all year. And that's the truth of it. But this is my riskiest account and my most irresponsible account. So it's the one that I like leave as the default so that I'm forced to look at it every day. Yeah, that's all I got to say about that.
You know, 50% volatility it
is a lot.
And
it's aggressive.
Are real, and it's all right saying, oh, I can handle drawdowns, but when they're a real thing, that's when, you know.
Dude, all of the guys who said, give me more risk, 20% drawdowns, I can handle 40% drawdowns. They're the ones complaining as soon as we hit 20% drawdown.
And then, the mindset perspective when that happens is that the first inclination is to drop their volatility target, which immediately is going to affect your portfolio because you're realizing drawdowns, and then you will not have enough money to actually make it up in the bull run. So it's one of those things that is.
There's some really good questions about this. So Kurt says, so when shit jumps, you should raise it. No, actually, because what you're saying then is that implicitly you can predict returns. If you think you're going to be able to dial it up and dial it down and play this thing like a fiddle, like you are implicitly saying that I can predict how well this is going. I can tell you if I could predict how well this was going to go, I'd do that, and I'd be richer than an astronaut, and like that. It's just not possible. There's many cases of people trying to. The worst possible thing you can do is try and fuck with it up and down. You just pick your thing, you accept your risk. Trevor, can you show other FINREV accounts? Yeah, let's have a look. Let's look at the last 90 days. Okay, so the am I sharing the right screen? No, I'm not.
Sharing the whole screen.
Sorry. All right.
Yeah.
So you can see we were short, really short here, and we got when the market crashed. And so the 50 vol accounts, 50 vol is the orange, outperformed the 45 vol, which outperformed the 40 vol, which outperformed the 35 vol. So when shit is really, really working well, you would expect the guy to take more risk. The guy who takes more risk when that risk pays off has done much better, right? But also, when we were completely short, like we were balls short here, and we got kind of fucked in these couple of days until we flipped to long, right? So you can see what happened is the 50 vol, which was the winning horse, got fucked harder. And the dark blue line, the guy took the least risk on the way up and got the least reward, also got fucked the least. And he got fucked from a lower point. So he went from 16.9% up down to 9.5% up. Not so bad. This guy went from being up 25% to being up 6%. Like he had a much bigger swing. And then when we got long and it all started to crack again, the 50 vol again outperformed. And it performed in that very predictable way where 50 outperforms 45, outperforms 40, outperforms 35. But the 35 is much more stable. The 50 is pretty wild. Like if we look at it over the last 12 months, the 50 has its moments, but truthfully, it's probably a little much. Like 45 or 40 are probably the sensible play here. 50, if we get a bull market, is definitely going to work really, really well. Like really, really well. Yeah. And 100, you need to be lucky to have it work. So if we get a really strong bull market, 100 will do amazing things. If we don't, it'll draw down exactly like, so Bitcoin is a 100 vol asset. How much does Bitcoin have drawdowns? It has 80% drawdowns. 100 volt could have 80% drawdown.
It could, yeah. If you're going to use them short term, then, you know, you have to decide when you're going to take profit on them. They are degen accounts at the end of the day. And if you get into that mindset of, I'm going to time the top of Bitcoin and take it at the top of Bitcoin, then probably you're going to hit that other side of the 100. So there's always risk with reward, isn't there? That's the thing. What games do you want to play? I mean, feet up, let it do its thing. You know, let it.
Look, I kind of like having a degen account at high vol. That's a relatively small percentage of my net worth. Like 90 grand's real money, but it's It's not a significant percentage of my net wealth. But if that was a significant percentage of my net wealth, that would be irresponsible. Like, even if that was a double-digit percentage of net wealth, that would be irresponsible.
Mm-hmm. Very great.
John W's got a question. John, can you just clarify? Are you asking Scott to open up your account specifically on a public call?
Can do, if you want.
Is this something that you want to email support about, John? Just let us know. Okay, yeah, so let's have a look at that then.
1, 2, 3, 4, 5, 6, 7, 7, 7. All right, let me get it up for you.
I'm interested in like the language as well, because like unless I take money out of FinRev and put it in my pocket, like I don't look at it as FinRev's made money or lost money. There is just this number to the account that is, to me, it's not real until it's in my pocket.
Yeah, I kind of think of it that way.
I think if you look at FinRev as, oh, I've won, oh, I've lost. Like,
Yeah, you're getting all the worst aspects of it. It's about what I'd expect.
see, so we got an account that's in profit and doing well, but John, you're saying made nothing, done nothing, everything shit. It's like, it's not.
It's not so bad, dude. Like honestly, if you want to go ahead to, if you've got spot bags as well of crypto, and you want to bring up, you want to screen share your crypto account in your Binance or your Bybit or whatever, and show how well your spot bags have done, I'm damn sure that you haven't made any money on your spot bags, because I haven't. I got slaughtered on everything I was holding. So you've been in crypto and you've made a little bit of money while the market's down 75, 80% in altcoins. Like, I don't know. I mean, if it was me, I'd shut the fuck up and say thank you, but you might not be me.
That's interesting. So another perspective in the chat is that FinRev is not in profit until the initial amount that was paid to be part of FinRev.
Yeah, that's a good point.
Is covered.
But I mean, that's over 3 years. It's what FinRev is, what 500 divided by 36, $180 a month. Is it making $180 a month? Probably about that. You know, we're a trend following system, guys. Like, when we get we make money when we get a trend. We haven't had a trend. This is the altcoin market.
Now but yeah, I don't think we've had this on the screen yet, because this is looking good.
So we, as a trend following system, almost guarantee that you'll lose money here. Almost guarantee that you'll lose money here. Almost guarantee that you'll lose money here. And while it's going sideways, guarantee that you lose money here. Guarantee that you lose money here. And you probably make money here, make money here, make a lot of money here, make a lot of money here. We need a trend. Until we get a trend, no one's making any money. What are we trying to do until we get a trend? We're trying to just stay in the game and not lose too much money. So if you were a guy who thought that pick a coin was the future of finance, like what's a popular coin, Maurizio? One off the top of your head, AVAX.
AVAX.
If you thought AVAX was a great coin and you bought it at 65 and it went down to 16 and now it's at 27, you've lost a lot of money. You know, we're in the game. We're waiting for a trend and we're not losing too much money while we're waiting for a trend. That's the game. That's all you can do. Can you turn it up and turn it down and try and time it? And you know, everyone's got a bunch of really, really idiotic solutions for how can I make money when the market's going sideways? If you make the money while the market's going sideways, you will not make the money while the market trends. There's no have your cake and eat it too. Like, this is a grow the fuck up moment in crypto. People say, oh, why didn't we bank profits here? Okay, why didn't we bank profits here? Because at this point, you don't know that it's not going to just keep going up and up and up. If you banked profits here, you would also have banked profits like right here to lock in profits. And you would have locked in your profits at 44% and missed out on going to 115%. So all the guys who always say, oh, but why can't we just lock in profits when we see profits? So that's a really fucking stupid thing to do. Like, it just doesn't work in the long term. It's a negative expected value thing to do. So what we're trying to do here is, to the best of our ability, we're trying to make the decisions that make us the most money in the long term. And what's the long term? The long term is the term that you guys paid for. You paid for 3 years of thing. I'm trying to maximize the amount of money you make in 3 years. I think that's the responsible and smart thing to do. I think. I might be wrong about that.
I remember the first year that I was in crypto, and then all of a sudden it was over. And then we were in this market that was just going down. I didn't have the tools or the know-how or anything to be able to do anything with this downward market. With FinRev, well, I still
I got some cool shit to show you. You guys haven't even seen this yet. Fuck, Maurizio, wet
I'll
yourself.
go for it. Go.
You're gonna fucking wet yourself. So, this is our new feature. So what we're doing is we're putting a sprint on to get 6 new systems up in a month. So instead of like this playing, because it takes quite a long time to implement one system. So thinking like, they're all the same, they all work the same way, right? They're all a single variable, cross-sectional or CTA style. And so why can't we do 6 at once? So this is what we're calling aggression imbalance. So this is taking a signal from the amount of people that cross the spread and buy at market compared to the amount of people who cross the spread and sell at market. So it's just market orders, pulling all the others out. We've got a 2-day EWAP moving average aggression imbalance. This is costless, so it looks a lot better than it is. And this is with the extremes removed, because it gets a bit weird in the tails. But that's looking pretty fucking sexy, right?
Looks pretty fucking good. Yeah, definitely.
Really fucking good. I mean, it costs are going to wear it down a little bit, but we got some things to say about that. The problem with this is it on just the top 50. So it looks actually quite worse on the big shit. Whereas our existing stuff looks much better on the big shit than the small shit. This looks better on the dog shit. So it's going to be capacity constrained, but it's good. And this is a 5-day on the top 50. It looks quite different again. Now, what I was expecting was order book imbalances are one of, in my opinion, the 4 different causes of trends. This is quite different to our existing trend following system. Like, I was expecting it to be looking a lot more similar to trend, but it really looks quite a lot different. And let me find. So this is our 7-day imbalance decile. So we're split it up into 10 chunks. So what we want to see is that the negative ones is that if we've got more sellers than buyers, so which is all this side, we want to see negative returns, and we want to see positive returns if there's more buyers than sellers. Now, see this dot here? This is screwing with us. What is that dot? That is when things have super, super heavy selling, they're exposed to short squeezes. So in this case, it's okay for us to chop the tails off. So we just chop both the tails off and just trade the bid in the middle. Yeah. So that's this was last week's result. We've got cross-sectional carry. We've got this. We've got cross-sectional momentum is this week, and we've got 3 different variations. We've got cross-sectional premium, and we've got cross-sectional change in premium.
Interesting.
And we've got liquidity, open interest, conditional. So the thing that I realized last night when I was smoking a doobie and thinking about this shit is that we've got this is really a massive success. This is very, very different than I would have expected. And it's conditional on aggressive buyers or aggressive sellers. Why can't we do the cross-sectional carry conditional? Why can't we do liquidity, open interest, conditional on aggressive buyers or aggressive sellers? I think, and a guy called Lionel Lightcycle, who's a HFT trader, told me that he gets signal from that. He just mentioned it in passing. And I think most of these things, like this, didn't come from my brilliant mind. This came from a really, really good institutional trader just mentioning it in passing to me and me writing that down. So most of the stuff that we figure out is from, like, this is from Macrocephalopod, by the way, on Twitter, who's like, ran a $5 billion trend following fund. So like when he tells me shit, I just write it all down. I got a notebook full of shit I write down off it. So yeah, I'm
Exciting. Looking forward to it. Like that.
yeah, it's really cool.
because-
So what we're doing right now is Timon is currently implementing the rolling window fitting process. So so we're going to use a 6-month rolling window, and let me show you the data for the 6-month rolling window. You'll fucking laugh.
And just what's with all these systems, Scott? What's the big picture for people? Is this
big-
more
the
about
big-
smoothing the ride?
The big picture is about smoothing the ride. So
Yeah.
right now we have this situation. We're a trend following system. We only make money when we get trends. That is obviously kind of a shit situation, right? It works. It's the easiest one. It definitely works. It's worked for 5,000 years. It'll work for another 5,000. But it's kind of cunty. Like, let's be honest. Like come on, no lies between us. Like it's kind of hard to live with. It goes sideways a lot, and then it makes a lot of money, and then it goes sideways a lot, and at the end of the year, like I'm fucking up 77% for the last 12 months at 50 volt. That's pretty fucking good. And I've done that with 20% drawdowns. I'm up 77% with 20% drawdowns. That is objectively a world-class result. How has it felt? It's felt like shit. It's felt like being kicked in the nuts.
Yeah.
It's like-
It is the reality of it. It is what it is.
The
Yeah.
reality of it is, it just you get paid, but you know why do we get paid? You get paid because trend following constantly hurts your fucking feelings. It's constantly a Fredo, you broke my heart situation, and what we're trying to do is smooth that. So by adding more of these systems, instead of like this, we're trying to get it like a little bit more up and to the right, which is what everyone else wants. And you know, you get it. So also none of this is free. Like you get a situation where we get the biggest trend you possibly imagine. We'll add 6 more systems and underperform what classic FinRev did. There is no free lunches in finance. Like anyone who tells you you can have return without risk, or you can have it this way and there's no downside to that, I assure you that by adding 6 more systems to this, we're going to introduce some equally cunty downsides that we're yet to discover. But hopefully we make slightly less money at the same vol target, but we enable a higher risk-adjusted return. So it's smoother, easier to live with, more overall. It'll be more, it's better overall to have more systems. Like, and we know this is true because how do people who make the most money do it? Like, The people who, Renaissance Technology has 1,000 signals and they trade 5,000 markets. Citadel has 3,000 signals and they trade 3,000 markets. Like, we just know that more signals and more markets are the way. And we, there's a bunch of maths about that, but I'm just going to bore you if I.
Yeah, but I think that will work really well because compounding, automatic compounding will take into effect, and you know what I mean. That will more steady will grow as a compounded aspect of it, like with the
More
less
steady is
risk.
just easier to live with, guys.
Exactly.
Like, I
Exactly.
mean, we all pretend that we want the highest overall amount of money, but what we really want is mostly not to have our feelings hurt when we wake up and check it every day. Like, that's the
Love
truth.
it. Love it.
Yeah, it's looking pretty good, right? Good.
Looking good, man. Looking good. Looking good.
All right, guys. See ya.
All right,
Cheers,
guys.
everyone.
Have a good one.